Barry Burns here with Top Dog Trading. Welcome to this special edition. Today I have a special guest that we're interviewing, Jared Tendler. And what I love about Jared is he is a psychologist that works with people to help their performance. So he works in the area of trading, obviously. That's what we're going to talk mostly about today. Wrote a great new book. I got the privilege of getting an advanced copy of that and went through it, The Mental Game of Trading. Definitely check it out. Highly encourage you to get it. He also wrote the books, The Mental Game of Poker and The Mental Game of Poker Part 2. He works with, he actually served as the head of sports psychology for the esports organization Team Liquid. So deals with even esports, also helped them win international championships, the International Grand Slam, the League of Legends Championship Series. He works with professional golf players, PGA tours that he's worked with. He's working with a top-ranked pool player, some of the top poker players around the world, and obviously financial traders. So very practical. You know, how you take your psychology, the mental game, and you apply that in an area that can be measured performance. And in trading, that's very, very true. So I don't think he's going to be asking us to, go to a psychologist and improve your trading psychology by laying on a couch and talking to your therapist about your mommy for 30 years and see what happens. No, he has to get results for people, measurable, practical results in a very short period of time. So that's what I love. That's what I respect. Jared, welcome to the program. Thank you for being here.
Thanks, Barry. Appreciate the intro and excited to talk with you.
All right. So I gave a little background there, but fill that in a little bit, if you would, with some details, whatever you want there.
Yeah, I mean, you mentioned kind of like my educational background, as a licensed therapist, as a master's degree in counseling psychology. But, growing up, I was an athlete. I played baseball, played tennis, basketball. At 4'11", freshman year of high school, realizing, my aspirations of playing professionally in any of those four sports probably wasn't going to happen. So I turned to golf and kind of got very good very quickly. A little late to the game, ended up going to Division III Skidmore College, was a 3-time All-American, won 9 times. However, when I tried to qualify for the U.S. Open my freshman year, I basically choked. Played some of the best golf of my life, tee to green, but missed 4 putts inside 3 feet. The ones that are, you're kind of expected to make, and that was probably part of where the pressure came from. And that was kind of my first kind of foray into the idea that, the mental game psychology mattered. And a friend of mine at the club, kind of handed me Bob Rotella's book, Golf is Not a Game of Perfect. And that kind of just kind of launched my interest in the field. And mostly it was self-serving. I wanted to get better and wanted to continue my aspirations of playing professionally. But while that material and others like it helped me continue to get better, in those key moments where it mattered most, I continued to choke. And so I kind of diverged from my aspirations and said, okay, well, I can't be alone in, kind of dealing with these issues. Let me see if I can find a better way. And so what I've kind of done is blend the traditional sort of sports psychology world with the traditional kind of therapy world, trying to get a little bit deeper into problem solving. You're correct. We're not going to talk about your mom, but we are going to kind of get into these layers of performance flaws that ultimately end up being kind of the major cause of a lot of the problems that most traders have. Now, of course, there are traders, poker players, esports athletes, golfers, whom their issues are personal. But there's a vast majority of professionals out there and across fields that don't have those personal issues, that are trying to get the absolute kind of maximum out of their career. And they're being held back from kind of this mental and emotional volatility that they can't quite fully get control of. They sort of see what's going on. They succumb to FOMO. They get caught up by greed, anger issues, kind of just, they get stopped out for the 3rd time in a row on a trade they know is going to pay off, and they get in for the 4th time, and revenge trading has them blind. It's like all these stuff you can kind of see and and yet you can't stop. And so, what I've done over the last 15, 16 years is develop a system for kind of performance psychology and specifically trading psychology that kind of mirrors the systems that, you all have as traders. One that is, very strategic. It kind of operates within certain kind of boundaries and frameworks that, use the limitations of the brain in terms of how the emotional system operates, how we learn, and again, kind of uses emotion as a tool to understand kind of what's causing them. That's a kind of a big, I think, misnomer in the field, which is that, emotions are the problem. Emotions are not the problem. They are the signal that is telling us what the problem is. And it's that performance layer flaws that I'm talking about, like high expectations, illusions of control, hindsight bias, confirmation bias. There's 30 of them that I cover in the book, but that's really kind of what we're trying to figure out is what are the flaws that are kind of forcing your hand to make the errors that you're experiencing in the market.
Right. Right. Yeah. Because there are a lot of people who I know in my past have told me, oh, you got to be emotionless when you're trading. You got to get your emotions out of the way, be emotionless, calm, cool, collected. So I actually studied meditation and so forth. And, that did help. That did help. But I loved what you said in the book, because the fact is, as human beings, we are emotional, right? And that's not a bad thing. In fact, it can be a great thing. The question is, okay, so how do we, now you said that emotions are signals. Explain that a little bit more, please.
So we're going to kind of look at this in two ways. So you're right. Emotions are not something you want to shut off entirely. There's research that shows that it's actually essential for decision making. But in my mind, ideally what we're looking for is our emotions to be like kind of a pure reflection of our system's interaction with the market. So that if you start to experience signals of fear or a little bit of nervousness, that's actually indicating some intuition that's suggesting that maybe you're at risk in a way that you can't consciously understand, or that you're kind of, if you're feeling like you're fighting with the market, maybe that's a signal of kind of what's going on in terms of, the volume and signals that you're operating on. So if we could use, kind of strip away the flaws that kind of blind us and kind of make our own biases get kind of imprinted in the market or alter our perspective of, the opportunities that we see or how our positions maybe line up in our portfolio or how our strategy lines up in terms of these opportunities. That's really where the problems lie. It's not the emotions. It's that the emotions have been contaminated by these performance flaws. So for example, right, you have a bit of FOMO, right? You want to jump into a position that has taken off. Maybe you just went to the bathroom and saw like, oh, you missed your entry. And now it's, several ticks kind of beyond, and you still want to get in, even though it's no longer indicated. And so we kind of strip away and understand like what's behind that, right? And it can be a lot of things, right? It can be, this desire for perfection. People hate to make mistakes. And so missing out is a form of a mistake. People hate to lose. So losing, and you didn't even lose money, you just lost the opportunity. It can feel that way too. There's a number of these sort of, again, kind of performance flaws that contaminate that like your perception of that situation. And so then your emotions become the signal that your thinking and your bias has kind of clicked up and is now affecting your perception of that opportunity.
Okay, very interesting. I like that. And a couple of the little examples you gave there I can totally relate to. I think every trader who's actually been into trading, and even maybe just simulate trading can understand that. And certainly those who've been trading with real money. Oh, real quick, just because we'll have some beginners here, just explain what FOMO is. FOMO, it's an acronym, but go ahead.
Yes, of course. The fear of missing out. And it's actually quite common in life as well. I think one of the cool things about trading is that it does expose kind of all of your weaknesses. And I say that as a cool thing because I'm biased in this regard. There's a cool opportunity for the competitive environment as a trader for you to just continue to level up, right? I think there is a bias out there that it's possible to be perfect as a trader, be emotionally stoic. You mentioned it, kind of numb or whatever. But the reality is that you're always going to have weaknesses. And if you understand that that's a reality and your job is not to like be perfect at all times, but your job, like some of the best competitors across all industries, the Jordans of the world, the Tigers of the world, and of course, the best traders in the world, they are ruthless at identifying their weaknesses. And of course, FOMO is a pretty common one.
Yeah, it is one of the most well-known, but again, I'm sure we have people who are brand new traders here who maybe weren't familiar with that acronym. Probably 99% were, but just want to make sure for our new people that they're on board. Now, you have a whole chapter in your book here, which, by the way, book's amazing. I can tell you put a
Thank you.
lot of work into that, and thank you for the advanced copy. But wow, talk about detailed study, research. And also what I liked about your book is you take all of that, but you present it in a very easy to digest manner. Your language in it is very friendly. It's like talking to somebody, and it's very easy to understand. The insights are powerful, but you don't have to, hurdle the linguistics that you use. It's just so well written that you're
Thank
a
you.
great writer. Yeah.
Thank you. That was very purposeful, because I think because I'm not a sort of psychologist by desire. I mean, I wanted to be an athlete, and so I feel like I'm kind of talking to other people that are, just kind of want things in kind of very simple, plain language, and not full of jargon.
Yeah, I really appreciated that. So now talk to us about tilt. You have a whole chapter on tilt in the book. What is that about? Tell us about that. Explain it to us, and the ramifications of it.
Sure. Yeah. So tilt is a term that's fairly ubiquitous in poker, and I'm personally kind of biased in this regard. I think it should be ubiquitous in trading because it's more of a fun way of describing the anger issues. So tilt, kind of the term originated from pinball, and quite literally, people would tilt the machine to make the ball move in the direction they wanted to. And
yeah,
poker players are just sort of notorious for tilting at the tables. They get unlucky. They think somebody's kind of playing back at them, and all of a sudden they start steaming and raging in their heads. And of course, as a poker player, you want to play against those players because they're basically going to start dumping money your way. As the person who is tilting, whether you're a poker player or a trader, it's not quite so good for you. That anger will shut down higher brain function. Higher brain function means that you have limited access to your knowledge base. You have limited access to, your vision and your decision making, your planning, all kind of shrink, and you sort of start to make very poor decisions. Mm-hmm. The early stages of tilt, like it is for other emotional issues, is you kind of know what you're doing, you know that it's wrong, and yet you can't stop yourself. That's oftentimes what causes the tilt of tilt, where you get angry because you're angry, and angry because you're making mistakes because you're angry, and it creates this sort of whole snowball of chaos, and it's not fun. So in the trading book, I kind of lay out the major different types of tilt, right? So the biggest one is the hatred of losing. Traders are very, very competitive, as well they should be. It's an insanely competitive environment, and frankly, I love that as a competitor myself. But there's a difference between understanding that losses are inevitable, that they're kind of part of the sort of business expense of being a trader, and kind of accepting the short-term volatility and the ups and downs that you go through, and the situations where you'll end up losing. And look, you put a lot on your line, your time, your effort, the education you spent, also the years getting better. And so, yeah, I mean, you want to win, you want to profit. I mean, that makes a lot of sense. And yet that would be fine if not those anger issues then causing you to cost you more, right? That's almost the most infuriating thing, is that your hatred of losing causes you to lose more. And so there's several other types of tilt. Injustice tilt, right, where the injustices of the market kind of cause you to get pissed off. Mistake tilt, of course. Revenge trading is a kind of my most favorite one. I think it's revenge kind of has a fun flavor to it. Again, not for the person who's experiencing it, but the stories oftentimes are very, very dramatic in that regard. And then entitlement tilt, which is somewhat lesser known in trading. It was very kind of ubiquitous in poker. For those of you who know Phil Hellmuth, one of the most kind of popular, most successful poker players of all time, he is kind of the poster child for entitlement tilt. And the way that he would get angry is that he would kind of berate the weaker players of the table, saying, "I'm so much better than you. You don't deserve to win. I've done X, Y, and Z." And so, in his mind, it was this feeling of deserving to win. And look, Phil's a great guy. I mean, we're not going to knock him. Everybody has their own weaknesses. And of course, he kind of becomes an easy target for a lot of people that watch him. But what that expresses is something that trading and poker and golf and all these competitive environments, don't tolerate, which is, there's nothing deserved, right? It's all earned. It's a great meritocracy in that regard. And that's one of the cool things about it.
Right. And it's earned every day. It's earned every day. Just because you're a great player, you wrote some big books, everybody admires you, you win, 12 championships. Okay. Then you come back to the table the next day or on the golf course or whatever you compete. Well, guess what? just because you did great last year or the last decade, that does not give you any entitlement or any real, like you say, entitlement that I should win because I did all this in the past. Nope, it's a new day, new competitors, and what you do today, and it's all up to you. It's your responsibility. And I loved too how you said that when you have the tilt issues, what it really does, it gives you limited access to your brain's resources. And so it's horrible. Now, the question is, though, on the other side, and this kind of goes with entitlement, I guess, maybe as a subset, but you talk about confidence. So like I do martial arts, and I do a lot of competitive things too, as well as competitive speaking, obviously, very clear. But when I go into a fight, for example, I've got to be confident, right? I got to go in saying, all right, I'm going to win this. There's no doubt about it. All right. So, and with other sports too, you got to go in having great confidence. I'm going to win this. Your coaches, your team, they're all like, yeah, you got this, this guy doesn't belong in the ring with you and all that kind of stuff. And that's part of it. Now, you can also get overconfident, and, the old saying of never underestimate your opponent is very true. And that comes into play as well, because then you tend to underperform, whereas you never know, that opponent could have, some new game that he's bringing. You might have watched all of his tapes from his previous fights, but he knows that. And so they've been training to do something different this time that you may not be prepared for. So you still got to be confident, but still be cautious and not get lazy about it. So anyway, talk about that balance and how you do that in performance, in behavioral psychology.
Yeah, I mean, I think it's a challenge, but I think first and foremost, we kind of have to get clear on what confidence means. Confidence is just an emotion, and I think people tend not to think about it like that. They think it's something kind of more solid, and especially when you are confident for a while, it feels like it's just going to stick around forever, which is one of the flaws that oftentimes cause overconfidence. But it feels more solid than it really is. At the end of the day, confidence is simply your perception of your skill. And as a trader, as a martial artist, as an athlete, you want your perception of your skill to be as accurate as possible, because that's going to how you're going to be able to utilize your skill set to the best of your ability. So, to your points of kind of boosting your confidence to make sure that you're feeling great, that's a common tool people use to get the most out of their skill set. That's what you want your confidence to be like. It's kind of like the oil in an engine, right? You want that kind of to be humming. If you have too much oil, right, too much confidence, the engine is going to seize. Obviously, the same thing will happen if there's too little oil, right? The mechanisms are not going to function quite as well.
The big problem with trading courses? Buying trading courses can be very expensive, but you don't know if they're even going to work for you. And so I'm going to flip that puppy upside down. I'm going to flip this model right around, and I'm going to give you one of my favorite trade strategies, absolutely free. No credit card required, no money up front, no deposit, no nothing. Just take it and use it and see if it works for you before you make any commitment. In fact, there's no commitment. Even if it does work for you, you have no commitment. So it's called the rubber band trade. And I'm Barry Burns. I'm with TopDogTrading.com. And I have so much confidence that I can help you to make money that I just give this to you for free. So that's how we market. I'll just be very frank with you. That's our marketing strategy, is we figure if we can get you making money first, then we'll have a trusting bond and we can go from there. You can buy stuff from me. You don't have to buy stuff from me. Either way, totally up to you. But at least I'll have helped you and given you some value in advance. By the way, let me share with you how this trade strategy basically works. The concept behind it is very logical. So we use the probability curve. You've probably seen the bell curve. And when you get beyond 2 standard deviations, then it's very unlikely, very improbable that the market's going to continue to go in that direction. In fact, it's only about a 2% chance. So that's why we call it the rubber band trade. We look for markets that have made these extended moves to the edge of the bell curve. And here's my little rubber band. And so it gets stretched, 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 stretched. And then what happens? I'm stretching this as far as I can. And now it's going to hurt. Ow. Actually, it did hurt. That really stung. And that's what we're doing. We're doing a reversion to the mean mathematical model. And that's why it's such a high probability trade. So go to rubberbandtrade.com, pick it up, try it for yourself. and let's make some money before you spend money.
When we're looking at that perception game per se, we're saying there are these flaws or biases that are going to cause you to become overconfident, and there are going to be these flaws or biases that are going to cause you to be underconfident. And that kind of ironing out those that kind of fluctuation is really important. There's a common cause of overconfidence and lack of confidence that I think is quite interesting, because it's called the Dunning-Kruger effect. And the Dunning-Kruger effect kind of has these two sides. On the one side, you have people who are so underskilled, they lack so much skill that they falsely assume that they're good, right? They're not even good enough to evaluate their own skill set, and so they become overconfident, right? This is the classic, person, a contestant on a reality show like American Idol, or poker players who are named fish, right? And they think they're great, and they go against these. And of course, you can think about many of your trading friends or the friends of yours who say, "Oh, have you checked out, Tesla lately? It looks like a great buy." You're like, "Well, where'd you get that?" "Well, I was watching CNBC." Okay, well, good luck with that. So this overconfidence oftentimes comes because people don't know how underskilled they are. And then on the flip side, and this is probably mostly true for your audience, people who actually have a lot of skill, and they make the flaw, or they have this flaw that they falsely assume that what they know is actually not that unique, and that everybody must know it, or a lot of people already know it. And so they become underconfident. They lose confidence because they falsely assume that what they know is not that special. And it's kind of crazy, because here you have people who have very little skill having more confidence than people who have a ton of skill. And so it just sort of goes to show you that confidence is not the be all end all. Skill is, right? I mean, I could be the most confident person in the world, but if I'm not a skilled trader, it's not going to really do a whole lot for me. I mean, there's a reason that the Dalai Lama is not a great golfer and he's not a great trader. It's because he doesn't have the skill for it. So, what are we talking about here? We're talking about skill at the end of the day. So don't make the mistake that confidence is a be all end all, because I'm sure that some people are kind of turned off by the idea. In Western society, especially, the last 15, 20 years, it's kind of been anointed as the be all end all, like you must be confident. And at the end of the day, you actually don't have to be confident to profit, right? It's all about your execution and your decision making. And you've all profited in trades where you got in thinking you were going to lose. It turns out you're not a psychic. So, making these prognostications, right? They're just that. They're not actually deterministic of what is going to happen. So yeah, we want our confidence to be as balanced and stable as possible, because that's how we get the most out of our skill set.
Yeah. Yeah, that makes total sense. And again, back to the analogy with fighting, same thing. If I've got more skills than somebody else, but they have great confidence, then I know I can beat them, because they're going to be reckless. And they're going to come in, with big sucker punches, big swings, all that kind of stuff. And it's like just leaving yourself open, and it's actually easy to defeat them. They've got a lot of confidence, but they don't have the skill set, like you said. And so that confidence is very ill-founded. And they think just that confidence, just being aggressive and coming in and rushing you, that's going to do something. And it's like, yeah, it's going to do something. It's going to get you on the mat real fast. So, but yeah, I agree that skill set is the most important. And then and I like what you said too, being realistic about it is really the key. You don't want to be overconfident or underconfident, because yeah, someone can have some skills, but not be confident enough, not being aligned with that reality. And that can make them a little gun shy, not use the full extent of their skills, or be impatient because, today, today I lost money and, oh man, I'm terrible, I'm horrible. It's like, no, you're not. You had one bad day. Maybe you didn't really even have a bad day. Maybe it's just that, well, the way the market moved that day did not align with the statistical probabilities built into your trading system for one day. Oh, well, so what? As long as you managed your money, managed your risk, you lived to be another day. As long as you kept your rules, you did everything right. And part of the confidence is just knowing, yeah, I know I'm good and I did everything right. And over a large sample of data, over many days, I'm going to come out ahead. So I like that. Now, discipline is another thing that's talked a lot about in trading, and it's even on the title of some trading books about psychology. So how does discipline play into trading? Because again, you have a whole chapter about that. So you've covered it in a bit of a unique way, I think, than some others have.
Yeah, I mean, and part of the reason for that is that I think it has been discussed in quite reasonable and well documented terms. So I really don't kind of get into the necessity of doing a trade journal and, kind of some of the basic kind of elements of what makes a good trader, backtesting systems and having good processes and study habits, et cetera. I think, to me, I feel like that's kind of already standard. I kind of wanted to move the conversation a little bit forward. And the way that I did that was to suggest that a lot of the issues that people typically think are discipline issues are actually not about discipline, right? You have to make sure that it's not the emotions like greed, fear, anger, or confidence issues that are kind of forcing your hand to violate your discipline, violate your trading strategy, violate your entry positions, move your stops, move your profit targets, take on too much leverage or size even too small, right? We all kind of have these parameters and systems, right, that you're attempting to utilize. And it's oftentimes easy to just assume that because you kind of broke one of your rules, that it was a discipline problem. And that, again, that can kind of extend to things off the outside of the trading hours as well. And so, again, you kind of go through the book and you can begin to clear out some of that emotional volatility. And if you do that, then, then your discipline is either going to just sort of spring to life. It's like, a weed that was, or a flower that was just sort of being stepped on. And once you kind of get your foot off of it, it's there. It can kind of start growing again. And there's not a whole lot you need to do. Other times the discipline is more like building a house in the middle of a forest. You have to kind of go in there and clear all the territory. And that's kind of getting rid of the emotional volatility. But then all you have is just an empty plot of land, right? And so now you got to actually construct and build the skills and build the habits and train yourself, much like an athlete. And at the end of the day, discipline from a mental standpoint is very analogous to, the strength that you have, muscularly, whether you're working out or doing a mixed martial arts or, me as a golfer. I mean, there needs to be kind of that integrity in your muscular system, in your technique, and discipline kind of follows along that pattern as well. We can even include your decision-making process, right? The actual steps that you take, whether they're very kind of intuitive and somewhat tailored or random to the situation, or whether they're very formulaic, that process is very much like an athlete's technique. So regardless of what we're talking about within the scope of discipline, we have to think about it in very kind of practical training type terms. And one of the big problems that traders make is, aside from, let's assume that we're no longer talking about the emotional parts, but they sort of assume that they can build discipline much more quickly than is real, right? So they realize they're making 10 mistakes, not all at the same time, but in general, and they think that they can fix them all at once. And so they say, today's a new day. I'm going to not do any of these 10 things on my list, right? And I'm looking at all of you right now, the traders who have those sticky notes on your monitor. I know, yeah, you know who you are, right? And you tell yourself that you're even looking at it, and yet you're still violating your trading strategy. Why is that? Well, if it's not emotion that's at play here, right, then it means that you are weak, right? And let's not think of that in negative terms, right? If you hadn't been to the gym in a couple of years, right, you're not going to sit down and go to the bench and say, oh yeah, I can lift 200 pounds today. No, you're going to start with what you can do. And that's one of the biggest problems. You try to jump too big of a hurdle and you're going to trip yourself up, right? You might be able to do it for short periods of time, right? I mean, it's like the equivalent of those Herculean efforts, like the people that can like lift a car off of a person, it's like kind of pinned underneath. Well, that is possible, right? Mentally, you can have that discipline. You can have that Herculean type discipline at times, but to do it day in and day out, you need to actually train in the right way. So it's much better to just pick one or two things that you can reliably focus on and work at, and really work hard to build that, right? And the cool thing about using kind of the physical, kind of nature of training and development as a parallel is that when we look at actually being in the gym and lifting weights, where does the biggest training effect happen, right? It happens when your muscles want to give out, right? It happens at those last couple reps. The first 8 reps of doing those bench presses, yeah, you're doing something. It's not nothing. It's not like you're sitting on the couch, but those last 2 reps where you are pushing hard, that is where you build strength. And so it's the same thing with discipline. And it's so easy for traders, pardon my French here, to say, fuck it, and just phone it in at these key moments where they think it doesn't matter, right? It's like, it's okay, right? I've already lost enough. what's the harm of just tossing in an extra 5 watts here?
Oh, okay.
And right. And the problem is what you are doing is you are training bad habits, right? You imagine pushing those last 2 reps and all of a sudden your technique is really bad, right? What's going to happen if you keep doing that? You're going to injure yourself pretty dramatically. And that's what happens as a trader. Your technique and you're not building in the right way, you're going to injure yourself. And of course, the injury here is, to your capital.
Yeah, exactly. And you're building bad habits. So it's like they say practice makes perfect, but that's not 100% of the truth. That's like a half truth, but the whole truth is actually perfect practice makes perfect. And because you got to build in that repetition, but perfectly train your mind. And so, yeah, when you throw that out, then, it's not only disastrous financially, but you're doing something up here, wiring your brain and rewiring your brain. We're going back to a previous pattern. And yeah, boy, that's brilliant. I love that. That's so important. People need to hear that. And, you mentioned something there too, which is I hear from traders all of the time. They said, I know what I should do. Right. I've got my, like you said, rules on my little Post-it notes on my monitor. I love that. So I see it. I know it. Which we could talk about that whole word, just break that word down. They know it. Okay. So that just means they've heard it to me. But how do they make the changes? It's like St. Paul says in the New Testament, the things I want to do, I don't do. The things I don't want to do, I find myself doing. And so there's this inner conflict of, okay, I know what I should do, but my behavior is not aligned with that. How do we align our behavior with what we want to do? And why are we so darn out of control? Where does that come from?
Yeah. So I actually don't talk about this in the trading book, but there's a concept called the adult learning model. And we all go through these different stages of learning. And the deepest level of training is something called unconscious competence. Right. It means that you've learned something to the point where you can be competent without even thinking about it. Right. And that's what we all aspire to get to, right? Is that level of mastery. Because what that does is it frees up your mind to learn new things. Just imagine going through your day, without having habits automated. Like imagine having to think about driving like you did when you were a teenager, first learning to drive. Imagine thinking about how to brush your teeth or eat food. I mean, like there's just so many things that we take for granted in our daily lives, let alone as traders, right? So any one of you can just think about what are the things you no longer have to think about, right? If you put yourself kind of back into a beginner mind that you had to think about back then that you don't now, all of that is in that space called unconscious competence. And of course, there are some bad habits in there, right? Just as you said, perfect practice is what we're aspiring towards. But when that practice is not perfect, or when there's at least been enough evolution in your progress that now things that used to be quite good for your trading now have become outdated, right? It's like a piece of software that needs to be upgraded. Mm-hmm. So the reason why we do these things that we know we ought not to is because they're relatively new, right? Yeah. You are guaranteed every single day that you trade to be at your absolute worst. Now, I'm going to qualify this, okay? I'm not saying that's what's going to happen. I'm saying that it doesn't take any effort. You can be as tilted as you want. You can be as overconfident, as greedy, as fearful, as tired, as distracted as you want. You can guarantee your worst. Now, for some traders that are quite experienced, their worst is actually far better than junior traders' best, right? That they've established that's such a high foundation. And so every single day that you trade, you are essentially attempting to see how far you can climb away from that baseline of unconscious competence, right? How much can you incorporate this new knowledge, some of which is the intuitive knowledge, right? That you're picking up and absorbing in real time as you're sensing and interacting with the market and seeing where the opportunities are, at a subconscious level. And so you're trying to escape that level as much as you can. But what happens, right? You get into this sort of middle zone where you're aware of what you ought to be doing, and maybe you're a little tired. Maybe there's a little boredom kind of setting in a sideways market. There's some distractions because, sideways market, then all of a sudden Twitter pops up and you get a phone call and, it's all, your mind is kind of no longer quite there. And then all of a sudden it's like trade opportunity, but then you sort of skip a step, right? You skip a step because your mind wasn't quite there yet, because that element of your decision-making process has not been mastered yet. So that's one example. Another example is our emotions get in the way, right? Any of the ones that we've already talked about, right? When the emotional system becomes overactive, right, it shuts down the part of the brain responsible for decision-making, planning, thinking, and it sort of shrinks that space. So what happens is and actually one of the most frustrating things is that you are aware of what's happening or what you ought to be doing or what you ought not to be doing, but you can't stop yourself, right? Because awareness does not equal control, right? Control lies in having enough competency, enough strength to be able to take what you're attempting to do and have it translate, into execution. And so, for all those reasons, right, that's how that kind of knowing, and you said it exactly, the word know is kind of a fuzzy word, right? Mastery is kind of the ultimate knowing. Everything else in that sphere, from your absolute worst to your absolute best, you are just currently in the process of learning. You're in the process of kind of knowing at that deep level.
Yeah, well said. Yep, very good. Well, my friend, is there anything else you'd like to share with the audience that I didn't cover?
No, I mean, I think you asked a lot of great questions, and I think we got to cover a lot of topics. What I will say, just kind of lastly, is around the topic of intuition. It is a topic that I didn't get to talk a lot about in the book, unfortunately. But I think it's one that can be conceptualized and understood. It's not mysticism. We're not talking about intuition in a larger life sense. We're talking about intuition in a way that is very kind of practical and tangible. So hopefully we'll get a chance to kind of have some people come to my website, and in a little bit I'll have a free download to help them develop their intuition more. So for those who aren't ready to get the trading book yet and want to kind of get a flavor for what my work's all about, that download will be available in the next month or so.
Oh, okay. And yeah, so when that is available, let me know, and I'll go back and add that to the notes for the podcast, the YouTube videos, wherever we post this. I'll be happy to add that. But for right now, where can people learn more about you? And by the way, is your book out yet? I know I got a early copy of it before it was published, but can people get it yet?
Yeah.
Okay.
It is, yes. It's basically everywhere you buy books. It's on softcover, ebook, audiobook as well, and I do the narration.
Oh, I love that. I love it when the author does the narration of their own audiobooks. Yeah, I think it's so much better because you know your material. And so, yeah, the way that you can put inflection into it and emotion, and you just know how to read your own stuff as opposed to hiring a professional narrator where it's all just, it all sounds very good, but it's kind of bland and boring.
That's like, a great voice. And truthfully, it actually worked really well for me because I actually made the book better. I did the audiobook recording before it was finalized, and reading through it, I was able to kind of tighten a few spots. And look, you mentioned earlier, I did work on this for a long time. It was a 3-year project.
Wow.
And I really wanted to make it, really tailored for traders and to kind of speak their language. And there are 17 traders whose stories are in the book, and they kind of talk from their own kind of point of view about what their experience was and kind of utilizing the material. And so it's very kind of practical, it's systematic, it's not kind of the fluffiness. I think there's a lot of great trading psychology books out there, right? I think my book is just kind of taking it a little bit of a step farther and kind of utilizing that content in more of a system form.
Yeah, there are other good books out there, but I did find yours unique, and I appreciated that very much. So the mental game of trading, go wherever great trading books are sold, and pick up a copy. Highly recommend it. And Jared, what's your website?
JaredTendler.com. Nice and easy. And I'm pretty active on Twitter at Jared Tendler. So if people want to, kind of message me there, they're welcome to. I'm always appreciate the feedback and happy to answer questions.
All right. Very good. Thank you for being here and sharing all of that with us. We appreciate it.
Thanks very, very much. Appreciated your time.